Hello everyone, welcome back to All Financial Discussion channel. For this video, it's actually a continued discussion based on my previous video. On my previous video, I actually have discussed the different categories of Singapore dividend stock. On that particular video, I have discussed on Singapore Bank, Singapore REITs, and Singapore Telecom. This video, I will continue to discuss the different possible categories of Singapore dividend stock to build up your passive income. This video, I will concentrate on utilities and infrastructure, shipping and offshore marine, and then commodities and energy. So this will be the objective of this video. Before I continue, this is very important to me. I urge you guys to help me by like this video. Guys, it's free and it's just a few seconds. Help me press the like button now. For those who are new to this channel, and if you want to encourage me, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. A quick disclaimer, this is not a financial advice. Please conduct your own independent research and consult a professional if needed. Never invest more than you are willing to lose. With this, we are ready to kickstart today's discussion. These slides here shows the different categories of Singapore dividend stock. Earlier on, I have done these three. This video, I will do these three in red. So on the subtopic, I will discuss the key player, typical dividend yield, why invest into that particular stock, the risk, when is a good time to buy, when you need to be careful, and the simple strategize when you actually want to invest into these different categories of stock. So this will be the objective of this video. In fact, currently, there is a conflict in the Middle East. Based on today's discussion, these three different categories of Singapore dividend stock, they probably will not have that significant impact as compared to my earlier on discussion. On my earlier on discussion, I have discussed on Singapore Bank and also Singapore REIT. They probably will have a higher impact as compared to these so-called different categories of discussion that I'm going to go through later on. Singapore utility and infrastructure stocks. Okay, so they are stable, defensive stock, same as Singapore Telecom. Why? Okay, because they actually provide essential service with predictable cash flow. Coming to the key players, we have the Sembcorp Industries that focus on energy, water, and urban development. We also have the Keppel Corporation, which also focus on energy, offshore, and urban solutions. The typical yield for utility and infrastructure stock is actually quite high, between 4 to 6%. Why invest into utility and infrastructure stock? Because they provide essential service, which means that they are actually quite resistant against recession. Whether it is recession, okay, because of the service is essential, so therefore they are able to still enjoy a stable and predictable cash flow. Hence, because of all this, they are able to support regular dividend payout. They also often enjoy monopolistic or quasi-monopolistic position in their sector. Inflation hedge versus regulated tariff or long-term contract. So this is the reason why invest into utility and infrastructure stock. Now, let me discuss on the risk. The regulated returns can actually limit the upside, okay, which means that the good on the stock price may be limited because of the regulated returns. Commodity exposed for energy-related utility. Okay, for example, we have oil, gas, electricity. For example, like I mentioned earlier on, because of current situation, okay, the oil probably will have some issue, okay, because the price of the oil keep on increase. Okay, so therefore, there is always certain risk factor. Next, capital intensive. Okay, so basically, they are actually high debt level, okay, which is highly possible. policy regularly change affect the tariff or contract. So this is actually the risk factor when you actually invest into utility and infrastructure stock. Next, I'd like to discuss the opportunity to buy utilities and infrastructure stock. First will be during market sell-off, economic uncertainty, okay, because they are defensive nature. So hence, price most likely will fall less, but temporary dip can still provide opportunity for us to buy the stock. Next, when dividend yields actually spike above the historical range, which means that typically at the higher range between 5 to 6%, this is also another indicative to buy the utility and infrastructure stock. Can indicate undervaluation relative to stable earning. Next, before regulatory clarity or tariff increase, positive policy development, in fact, can boost the earning and also the dividend, since the income is quite consistent because of essential service. Next will be when interest rates stabilize or in fact start to decline. Okay, because lower borrowing costs in fact improve their net cash flow for capital heavy project. Okay, so basically this is also another opportunity for you to invest into utility and infrastructure stock. Next, on temporary negative news with strong fundamental. Okay, for example, okay, there is some delay in project or short-term commodity fluctuation. The core operations still continue to generate steady cash flow. Okay, so basically these are the 5 opportunity for you to buy the utility and infrastructure stock. Next, when you need to be careful. Firstly, rapid rising interest rate. Okay, because this actually increase the financing cost. Remember, utility and infrastructure is heavy asset, so they probably will borrow to buy their asset. Hence, with higher interest rate, then this actually increase their financial burden. Next, regulatory change that cap the returns or delay project. Okay, when there is a delay project, they probably have some form of LD. This can impact the utility and infrastructure company. Next, high leverage plus declining cash flow. Okay, so basically this is also another red flag. Last but not least, energy commodity volatility actually affect their earning. So this can be potential red flag also. Like I mentioned earlier on, because of Middle East conflict, this can be a big issue also. Coming to the simple strategize, accumulate during short-term market dips. Okay, so basically buy some when the market actually dips. You must be able to hold for reliable income and defensive capital preservation. Okay, so which means that you must be able to hold it for some time. Okay, because it also give up dividend. In fact, quite attractive. So basically, when you actually buy during the dips, you hold for the dividend and then reinvest the dividend for compounding, especially in low growth environment. So this is how you can invest into utility and infrastructure stock. Next will be Singapore shipping and offshore marine stock. Okay, so basically they are cyclical, okay, which means that they are actually very volatility, capital intensive stock that actually link to global trade, oil and gas demand, and thereafter the shipping rate may also affect. Coming to the key player, Yangzijiang Shipbuilding. Okay, so later on, I will share you the share price of this company, Yangzijiang Shipbuilding. Next will be Singapore Shipping Corporation Limit Set Group. Okay, so basically the typical yield, which is quite low, between 2 to 3%. Okay, so they are actually highly variable due to cycle. Okay, so for these types of stock, shipping and offshore marine, typically you will not buy to keep for dividend yield. Okay, so later on you will be able to appreciate why we actually buy these categories of Singapore stock, shipping and offshore marine. Why invest? Okay, because they actually exposed to global trade and energy market. Okay, so like I mentioned earlier on, because of the conflict in Middle East, so therefore you can actually see that this particular stock, Yangzijiang Shipbuilding, in fact rise rather than fall during this conflict period in the Middle East. They also can deliver very high returns in up cycle. Okay, so basically with uncertainty, okay, in terms of the price of the oil, this can actually deliver very high return in the up cycle. Dividend potential rise during strong fleet or rig demand. But I like to mention this, okay, typically we will not invest into shipping and offshore marine stock for us to generate dividend yield. As you can see from here, the yield is actually considered quite low as compared to the rest of the dividend yield in Singapore. Next, they are often heavily asset backed. Okay, so because you invest into shipping and offshore marine, they actually own a lot of so-called expensive asset. So therefore, you are actually heavily backed up by all these expensive asset. Coming to the risk, highly cyclical because the earning actually tied to shipping rates and also the oil price. Okay, so basically, this is actually very sensitive. Okay, the oil price. Currently, the oil price keep on increase non-stop. So this can be beneficial for Singapore shipping and offshore marine stock. Okay, because of the price that is considered high. However, for those that actually provide shipping, okay, so this may impact them. So basically, there are actually two sides of the coin. Next, capital intensive, okay, because high debt can actually amplify their loss. Okay, as I mentioned, for this, in fact, they also require to borrow heavily for them to expand. This can be an issue. Next, global trade slowdown or oil price actually drop can sharply reduce the earning. Okay, so this is another risk. Currency and geopolitical risk. Okay, so like I mentioned earlier on, okay, let's say there is certain conflict. Okay, all the so-called shipping may be affected. For example, okay, they probably will so-called limit certain transportation. Then you may have some potential issue. So this is for Singapore shipping and offshore marine stock. Let's take a look on this Yangzijiang shipbuilding share price. Okay, so if I'm not wrong, the conflict at the Middle East actually started on 28th of February. So from here, you can see that even with conflict, you can see that the share price of Yangzijiang shipbuilding, in fact, still pick up. Okay, so basically, this is actually the zoom in effect. Let's take a look on the zoom out effect. Okay, so basically, this is actually the zoom out effect. So potentially, okay, sometime during the February, we probably can guess that there are going to be some form of conflict at the Middle East. So from here, you can see that Yangzijiang share price, in fact, has picked up quite a alarm manner. So this is, in fact, one of the unique stock. So when there is potential conflict, this stock, in fact, perform better. Okay, so basically, this is actually another categories of Singapore stock, which is the shipping and offshore marine. They typically are less so-called affected by conflict. In fact, for this case here, because of the conflict, the share price of Yangzijiang in fact pick up in an alarm manner. Okay, so basically this is actually for the shipbuilding offshore marine stock. Next, I'm going to discuss when is a good time to buy shipping and offshore marine stock. Okay, so the first one will be during sector downturns, okay, which means that low shipping rates. Okay, so we need to buy when bid rate or rig utilization or offshore contract are actually depressed. Historically, these are the best opportunity for outsized gain. Second, when oil price or global trade outlook are stabilizing. Okay, so this is not the case currently. However, okay, when they are actually stabilized, this in fact will be a good buying opportunity. Shipping and offshore marine actually demand often lack the micro recovery. Okay, so this is another buying opportunity for shipping and offshore marine stock. Next, when valuations are cheap, relative to asset, okay, when price to book is actually less than 1. Many companies, in fact, own the ships or rigs, okay, so therefore the book value actually provide downside cushion. Next, on company-specific reset, restructuring, debt refinance, or new contract can often unlock value. So this is another buying opportunity. Look for strong management with recovery plan. Last but not least, during rising demand cycle. So basically, this is actually the current situation. Okay, the oil actually rise up a lump. So early in global shipping or offshore marine upturns. So basically, this is actually for the peak returns. So this page here shows you the 5 opportunity window to buy the shipping and offshore marine shares. Now, I like to focus when you need to be very careful on shipping and offshore marine stock. Okay, so basically when at the top of shipping cycle, the high price but limited upside because they have already factored in the price in. So therefore, we are going to have limited upside. So this is actually one red flag. Next will be rising interest rate because this will increase the debt serving cost. Okay, so for example, imagine this, those shipping and offshore marine, okay, they probably need to buy ship, probably need to buy rigs, and because of rising interest rate, they need to serve the interest rate, incurring more costs. So this is actually also another situation that when you need to be careful. Next will be weak global trade or oil demand forecast. Okay, so currently this is not the situation. Okay, when there's no demand for oil, then you potentially need to be worried for shipping and offshore marine. However, like I mentioned earlier on, because of the conflict in the Middle East, so therefore, for some situation here, some of the share under the shipping and offshore marine, in fact, perform better. Next, company with high leverage or aging fleet. Okay, so take a look on those so-called report. Okay, whether the fleet is actually all old or basically they have some form of high leverage. Next, I come into the special strategize. Wait for technical low to buy. Okay, always wait for the dip to buy. Okay, so now probably is not the good position to buy shipping and offshore marine because they have rise up quite a bit factor now. Okay, so but one thing I like to emphasize also, shipping and offshore marine is actually not a dividend stock. Okay, they are actually not giving a very attractive dividend stock. They are actually considered some potential growth stock. Keep this in mind. Don't buy shipping and offshore marine for your retirement plan. Okay, because okay, in terms of volatility, dividends and capital swing is quite drastic. The key strategize that you need to do is you need to hold through the recovery in order to capture the upside. Consider trimming when they are actually at all-time high. So this is actually for shipping and offshore marine. Before I continue the discussion on commodities and energy, okay, I need your help, guys. Help me by like this video. When more you guys actually help me to like this video will have a better chances to reach out to a larger audience. So guys, it's free. Help me. Press the like button now. For those who are new to this channel, and if you want to encourage me, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. Now, let's come to commodities and energy stock. Okay, so basically this is also considered as cyclical. Okay, so there will be a cycle. Rather than dividend-oriented stock, this stock actually potentially can be also growth-oriented stock because they are in fact linked to oil, gas, metal, and energy price. Coming to the key players, okay, again, it also includes Sembcorp Industries and Keppel Corporation, which I have introduced earlier. Beside that, we have Olam International and Wilmar International. The typical yield is also quite high, between 3 to 6%. However, okay, it can be variable. In fact, they actually depend on commodity cycles. Why invest into commodities? Okay, so basically they are in fact exposed to global commodity and energy price cycle. So you're going to have potential high capital gain during commodity up cycle. Okay, for example, in current situation, because of the demand for oil, so therefore you can potentially have some form of high capital gain. Next, dividend income is possible during strong earning periods. Provide diversification outside the defense sector, which I introduced early on. Coming to the risk, okay, so like I mentioned, this is in fact highly cyclical because they are actually tied to commodity price, for example, the oil, gas, metal, and agriculture. Global microeconomics conditions, in fact, will be affecting the demand. Currency fluctuation, okay, for example, okay, Singapore dollar versus the USD dollar, this can also impact the earnings. Next, geopolitical risk can, as the current situation, in fact, there will be some form of conflict in Middle East, and we also have some trade restriction, okay, by US and some sanction by US also. Next, on the capital intensive, okay, so leverage can magnify the loss. So this is actually for Singapore commodities and energy stocks. Now, let me suggest when is a good time to buy commodities and energy stock. Firstly, during commodity price downturn. Okay, so currently this is actually not the situation. Okay, because oil has picked up quite a alarm manner. Metals or agriculture price are depressed, then it's a good opportunity for you to buy commodities and energy stock. But now probably is not the situation. When valuations are low relative to book value or replacement costs, many energy companies are asset heavy. Okay, so basically they own a lot of asset. So therefore, the book value can actually provide a floor, basically provide a base early in global economic recovery. Okay, so rising demand actually boosts the commodity price. So therefore, it's going to have higher earnings and also potential higher dividends. Next will be on company specific. Okay, basically new contract, efficiency improvement, cost reductions, or asset acquisition. Last but not least, when global inflation actually drive this commodities demand. Okay, so basically for commodities, they often act as inflation hedge, and therefore they can benefit both revenue and valuation. So these actually are the 5 best opportunity to buy commodities and energy stock. Next, when you need to be careful when you actually buy commodities and energy stock. Okay, so when the commodities price in fact peak, like current situation, oil in fact is probably at or near the peak value. So therefore, because of this, we are going to have limited upsides and we have the risk of correction. Next, rising interest rate. Okay, then we need to be careful because increase the debt cost for leverage energy company. Like I mentioned earlier on, many company in fact borrow in order to expand or borrow to buy the commodity. So therefore, with higher interest rate, they are going to incur more debt costs. So this is actually another thing that you need to be careful when you actually buy the commodities and energy stock. Geopolitical or regulatory issue that impact the production. Okay, so this is again another situation currently. Okay, rather than impact the production, okay, we have limited supply of oil. Okay, because of the conflict at the Middle East. Last but not least, overvalued stock, in fact, trading above the historical high relative to asset. So this is when you need to be careful when buying a commodities and energy stock. Coming to the simple strategize, buy during commodities downturn, okay, which means that the price actually drop, or maybe at the early recovery phase where there is a potential for us to have some form of upside, then we can consider to buy this commodity and energy stock. Hold for capital appreciation. Okay, so basically you must be able to hold, okay, let's say for a long-term potential also, okay, because they are actually cyclical dividends, which means the dividends are not really fixed. So basically there will be a cycle, high-low dividends potential. Next will be diversified across multiple commodities or sector to reduce volatility. Okay, so basically this is actually for commodities and energy stock. This come to the end of today's presentation. Please help me to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.